Hello ladies and gentlemen, my name is Greg Michalowski. I'm the Chief Currency Analyst for FXDD, and today I thought I'd talk to you a little bit about the U.S. Employment Report, which is scheduled to come out tomorrow, 8:30 a.m. Eastern Time. I want to take a look at two different things. One is to take a look at the estimates of the non-farm payroll report, or the unemployment report. What can you expect? What is the market expecting? And then I'll take a quick look at the euro versus US dollar, try to define risk parameters for you as a trader. A question I often get from traders is, if the number is stronger than expectations, what should you do? And that will depend on the market's sentiment. But generally speaking, if the number is stronger than expectations, if it's showing that the economy is on a more upward trajectory, getting stronger, you should expect the dollar to move higher. Conversely, if the number is weaker than expectations, you should expect the dollar to move lower. And so what traders will do is take a look at the estimates of what economists, what traders are expecting. This chart right here shows the historical movement in the unemployment rate in the United States. Back here in 2008, it was as low as 4.9%. Up here at the peak around 2009, 2010, it reached 10%. Currently, the market rate is at 8.3%, above the midpoint of this range here. So it's still a little bit higher than what the market, what the Fed, what most people want the unemployment to be. Tomorrow, the expectations for the unemployment rate is for it to remain steady at 8.3%. If the market rate should come in less, that would be more bullish for the dollar. It would indicate a stronger U.S. economy. Let's take a look at the next chart. And this is of what is called the non-farm payroll, or NFP. The non-farm payroll measures the amount of jobs, the number of jobs that are added or subtracted from the U.S. economy over a month's time period. It doesn't include farmers, so it's a measure of service and manufacturing, construction, those sectors of the economy which produce goods or services. Discounting the farmers, not that they don't produce goods and goods, but discounting that sector of the economy. And what we see over time, of the historical time going back to 2008, is when we were in the job recession, lots of jobs were lost. This is a zero line. These indicate jobs lost on a month-on-month basis. Since around March of 2010, number of jobs have been added for most of those months. There's a few brief period there, 4 months, where jobs were subtracted. But you can see that it's sort of a sawtooth pattern. Let's look at the most recent data. And over the last month, as a matter of fact, we had a nice upward momentum move to 163,000 jobs added last month. That is above the 3-month average of 118,000. What are we expecting tomorrow? 127,000 jobs, less than last month, but greater than the 3-month average. So it's not sort of a medium type number. If the number comes out stronger, that would indicate more jobs are being added in the economy. The dollar should get stronger. If the number comes out weaker than 127, maybe weaker than the average of 3 months, expect the dollar to get sold off. Now let's take a look at the next chart, and I want to take a look at the euro versus US dollar and give you an idea of how I would look to trade it. First off, we don't know what the number is going to be, and so if you go into that number thinking that you can figure out what it's going to be, different than what the estimates, I think that's a foolish play. Instead, what I think you should do is trade the market after the release. Trade the momentum off of a weaker number or off a stronger number. Let the risk from the event happen, and then look to trade the market using key technical levels. What do I mean by that? Take a look at this chart. This is the euro versus US dollar. It's a daily chart. And what do you notice here? 1, 2, 3 different points on forming a trend line to the downside. Here's our current price right here around the 125.86, below that top trend line. Now let's take a look at down here, and over the last month and a half, we've seen more of an uptrend in the price. And along the bottom trend line, or this uptrend line, we have 1, 2, 3 different points as well. So that's defining our risk on the downside. Let's take a closer look at that area now. And this is the same chart but just zoomed in. And in between the upward sloping trend line and the downward sloping trend line is a blue line. That blue line represents the 100-day moving average. Notice how it pretty much dissects resistance on the top, support on the bottom. The price is currently just above that 100-day moving average on today's bar. That suggests that the market is a little more bullish going into the number tomorrow. It also will give traders a clue as far as where the bullish-bearish sentiment is for tomorrow's number. After the number, if the number comes out stronger than expected, we can expect the euro to go down. When the euro goes down, the dollar goes up. That would indicate a stronger U.S. economy, a stronger dollar. The price would then go below the 100-day moving average at 125.57. That would be an indication to sell. Look for the market to move lower. Look for the market to move down toward our trendline support at 124.68. If by contrast the number comes out weaker than expectations, then you can expect that this bullish bias would continue. Traders should look to buy the market and look for the market to extend above the 126.58 level, above that key trend line. If it extends above the key trend line, look for further momentum in the direction of the break. So with the charts in front of you, by defining risk, by defining the key technical levels, you'll have an idea of where there might be support, where there might be resistance, and where the market may be going after the data is known. So I like to say be aware, be prepared, and then trade the data after it's known, after the risk is gone, the event risk is gone, and I think you'll find yourself that you're in better position to either make some money in the foreign exchange market. My name is Greg Michalowski. Good fortune with your trading.